Hello, welcome to Pensions in 10 with me, David Brooks, and my colleague Andy Knight-Stevens. This week, we have a quick look at the gilt yields and what they've been doing the last week or so. We talk about the pension schemes bill and some of the machinations around that. And finally, we give our pension some attention. Okay, Andy, for our first story, let's take a look at gilt yields, which we obviously noted last week had been grabbing headlines because they've reached recent highs. And can you talk us through the implications for DB, DC, and other areas of the economy?
Yeah, sure, Dave. So during August and actually into the start of September, medium and long-term UK gilt yields did experience a notable increase. They've gone up. Actually, I'll just add they've dropped down a little bit in the last few days, but the trajectory is still sort of on the rise. If you look back 1 year, the kind of 20-year gilt yields about 4.3%. Now it's around 5.5%. So definitely an increase over that period too. So what does that mean? Overall, it's driving sort of record DB scheme funding level improvements. For those schemes that aren't fully hedged against interest rate changes, they've benefited the most from the significant rise in gilt yields. So that's a good thing for those schemes based on those gilt yield increases. Because what happens is that leads to liabilities reducing in value by more than the scheme's assets. But I think just zoom out big picture, they're probably higher than they were under the Liz Truss and Kwasi Kwarteng debacle, but there's no panic this time. It hasn't been the speed of increase that it was then. But yeah, overall, DB schemes continue to improve in funding level. You can see that in our Sirius index that we published. Just a plug there to have a look at that for your listeners. That's very good. So let's just focus on DB schemes there. So for a minute, and also sort of why. So I think gilt yields increasing for a variety of reasons, but that's heightened investor concerns over the government borrowing levels, persistent inflation as well. That's still out there, and there's these structurally lower demand from sort of traditional buyers. Also, you've got the Bank of England continuing with their quantitative tightening program, selling and letting bonds mature, selling bonds back into the market. There's some information out there that about 0.7% or otherwise can be attributed to the QT program. So 0.7 rise in bond yields, some reasoning there, it's linked to the QT. So bond yields rising, yes. Of course, when they're volatile or rising, scheme's liability hedge ratio can go out of whack, might deviate from its target, and that could introduce unwanted risk to the scheme. So obviously, suggest schemes can rebalance, have a look at it rebalancing, speak to your consultant where rebalancing might be required. Obviously, it's crucial to monitor those positions, and obviously with gilt yields rising, materially be prepared for capital calls. The LDI managers, if you've got any strategies with LDI funds, might be enacting deleveraging events. So just be aware there. So that's DB, positive news in terms of funding level progression. DC, higher government bond yields, Dave, better annuity rates, or rather you're getting more for your money if you buy an annuity. So you spoke about that last time, so it's a bit more of a nod to that. And there's been more interest in annuities over the past recent times. So yeah, if yields continue to rise, you'll see more money you get for buying an annuity for the same pot. And then, yeah, obviously, this high bond yields can feed into other asset classes as well. So there's implications there. So if any listeners are concerned and trustees are concerned, obviously check in with your investment consultant there. But yeah, no need to panic. It's just, we always talk about this now, don't we? Government bond yields, are they government bonds, risk assets? They're so volatile.
It never used to be. I'd say this lots of times, but it never used to be until 2022. I don't think I'd ever looked at a bond yield chart. No, every time there's a fiscal event or something happens, I always think, oh God, what's the bond yield doing? And as I always get told, zoom out, Dave, zoom out. Can you look at the day chart? Things look very exciting, and then you zoom out, and it's usually not that exciting. It's usually just maybe slightly more exciting than it has been for the last 20 years.
Yeah, zoom out, but also good to be aware and monitoring.
Yeah.
Agreed. Okay, Dave, can we talk about the pensions bill? Where are we up to with the pensions bill? It's this massive thing, and I'd just like to know, and the listeners would too.
Okay, thanks for asking, Andy. I will calm you. Well, I don't know if I can calm you because it's been a bit of a strange journey so far for the pensions bill. So, obviously laid a few months ago, and it's been going through the process of through Parliament. But the government have tabled an absolutely massive paper of amendments, 90 pages, around 240 amendments, which is, I think, slightly higher than what you would normally expect for a government, a government paper, a government bill, and their own amendments are that number. So that's I don't know. It doesn't feel great. It doesn't feel like the pensions bill was probably in the position it should have been when it was first laid before Parliament. So that means there's a lot for geeks like me to be having to go through and work out, well, if you're changing this from the Secretary of State to the regulator, what does that mean? Some of the finer detail around super funds, how they're going to work, the the uh, the default decumulation, all this sort of stuff. So there's a lot in there that we just need to make sure we're just tracking it through properly and not, our initial read is unlikely to be the final read when we get to the end. Obviously, and last week as well, there were committee meetings with lots of representatives from the pension industry chatting through what their views are. And it got a bit feisty because the industry are still fairly resistant of the mandating power that the government have put in there. So where they will specify what sort of investments that schemes can or what they want schemes to invest in. And Torsten Bell's come back saying, well, basically they need it in there because we've had the Mansion House Accord and the Mansion House Compact, and there is definitely a suggestion from Torsten's comments that he doesn't think the industry is actually going to fulfil on those promises. And so if they don't, then the government will need this mandation power, so they think, to ensure that the assets are invested in the way they want. So it's getting a little bit feisty
Yeah.
with the industry. So that's interesting.
Torsten Bell sort of fighting back, should we say?
Yeah. Yeah, yeah. What was
Yeah.
the headline from Pensions Expert? I've still got it. Yeah, Bell fights back. Yeah, that's a
Oh,
proper
okay.
headline from Nick
Strong,
Reeve
strong
there.
words, yeah.
From Pensions Expert. Yeah, so you don't get those headlines very often in the pensions press. So that's Bell fights back as pensions industry unites against investment mandation. My only problem, Nick, is I don't think mandation is a word still. Still don't think it's a word. I think we're just using it. It's going to become a word. It'll be in the Oxford English Dictionary in a couple of years, but I don't think it's a real word yet. But sorry, Andy, do you want to come in?
Watch the space on that word, mandation. Also, watch the space on the mandation piece
Yeah,
itself. Yeah, I think that's obviously an area of heightened focus and interest, like everything in there. But this is a very interesting
yeah.
area, so I'll be keen to see the updates.
Yeah. But also, there's another bit in there as well, which I think we should just mention. So, the Virgin Media case. So, this is something we've talked about on these pensions in 10 in the past. This is where a court case ruled that if you hadn't had appropriate confirmation from an actuary that a rule amendment had been made and didn't affect the contracting out status of the scheme, that's a very quick version of what happened. So, deeds without it could be invalid, and that could cause all host of problems for pension schemes. So the government have now included some extra clauses in the bill, which I have to say are astonishingly good. So I think the industry is a collective sigh of relief that these could actually work. So there's obviously still a bill, so we'll have to see how they go through. But currently it does look like that an actuary will be able to look back at any evidence they can find and see whether, on the balance of probabilities, this deed, didn't cause any problems with the reference scheme test. And also schemes that have previously wound up or gone to PPF, they appear to be given a clean bill of health. So there's no need to go back and looking at old documents and digging up issues from the past. So that's definitely looking like it's some good news for those schemes that thought they might have been affected. I still think talk to your lawyer, talk to your actuary to make sure because there's going to be situations where it could still be an issue. So I think definitely consult with your own advisors. But it looks like there's a solution that could work.
Fantastic. Always nice to hear some good news, good outcomes on them. Okay, and just wrapping up with pensions attention. Dave, who's the latest person doing pensions attention?
Well, I think we probably should start running a book or something each year as this builds up, because it's always a surprise to me who they pick. So this year, the headline is Ross Kemp. Ross Kemp is the latest pensions attention ambassador. So he joins an illustrious lineup of, and I didn't have to Google this, I might have done, Big Zoo, Timmy Mallet, Gemma Collins. So yes, and now Ross Kemp is suggesting that, and actually it's auto playing just here. I've got Ross Kemp pumping iron on some kind of incline bench and telling us that don't get in a sweat about your pension and go and have a look. And they've got a website which we'll put in the link in the comments. But people should be signposting members to go and make sure that they're at least every year having a quick look at their pension, making sure they're paying what they can. They've got a financial advisor, Bolasol, who I must admit I wasn't aware of before, but she's giving some tips on what people can do to make sure that they're looking after their pension, paying money in, reviewing what's happening, thinking about what your targets are and what you want to do when you retire. Ross wants to go playing golf, it seems, which is a lovely way to spend your retirement, I think. But yeah, so just noting that, and we'll include the link in the comments.
Fantastic. Okay, thanks everyone for listening and watching. Dave will be back with you next week. And yeah, see you then.